Sorry. You should be able to see my screen now. If you can't, please send a message a chat message to Diane or Vasha and let them know, and I will stop so that we don't get too far ahead of ourselves. What we're going to talk about today is many of the steps, and this cannot be, in the time period we have, cannot be an all in all to create a new compensation plan, but at least to create awareness of what it takes in order to create a new compensation plan. Many of you are probably aware of at least some of these. I'm going to add, in terms of presenting, I'll be adding my experience and some examples in as we go, in terms of trying to be able to figure out, are you ready? So the first thing would be, will the slides advance? There we go. So with sales compensation plan design, of course, that can be daunting. In my career, this is one of the areas where many times HR simply shrugs their shoulders because they really don't have, they're not invited to the table, they don't have the experience, but if you've never done it before, I can tell you it's extremely energizing. You'll never really experience getting to know and understand how your business works until you go through a cycle on sales compensation. And like all the questions that you typically have to answer in doing any sort of communication, sales compensation steers a parallel path to that. So first the why. I've had clients, who haven't revised their plans for many, many years. One recently had not revised their plan in over 20 years. And we simply don't have a static business environment anymore. You have to always ask yourself, what degree of change exists? Is it a big change? Is it a minor modification? For example, even just moving into the second year of a multi-year change would be enough to say we have enough here where we need to do a change in our plan. The when is a question that a lot of times, if you have to ask that, you might be too late. But there are always ways to make changes over time, like even mid-year modifications. So even if you can't get something in time for the new year, you might still be able to do it as a mid-year modification, particularly if it's an improvement to the plan that the sales force would welcome. Who is always an interesting question, because the spectrum ranges from no one wants to be involved to everyone wants a voice. And if you've ever done this before, I think you could probably think of the people who come to mind who suddenly come out of the woodwork as experts. And then the how. How is one of the most important takeaways from today, because your design is not going to be the answer. Your design typically is where people like to start, especially if they just like to dip into this once a year or so. A sales compensation plan design is an outcome. And it's really important to think of this frequently in a process of designing a sales compensation plan, because you have to understand the business, you have to understand the available resources, before you can even start to think about the how and the why and incenting actions of eligible employees. So the design is actually the answer after going through and looking at numerous questions, which we'll explore today. It's not the answer which then begins to look for questions. And unfortunately, that's how many plan design processes start. So let's go ahead together here and let's dig a little deeper into some of these questions. Let's start with the why. So why do sales incentive plans change? And by the way, is change even a good thing? Do salespeople look forward to it? Well, the answer to that question is typically no, unless the previous plan just didn't pay off or they weren't successful with it. But as long as your company changes and your business environment changes, and that would be things like the competition and regulations and product mix, so almost all of us could look at that and say, yes, the business does change. Assuming all that in advance, then there needs to be change in a plan as well. First of all, there always will be a challenge for sales to increase revenues and profitability. And sales is what I'd say is the tip of the spear. And that means, beyond just having a new product available, is manufacturing doing their job, is marketing doing their job. Sales is the one who actually has to take the step forward into the market and actually execute on the plan. In any sort of a strategic planning process, there has to be a way of identifying opportunities and threats, and then taking decisive actions. And many times, a new sales plan is just that. It is the decisive action that a company takes in order to move forward through changing markets. We see continuous changes in most markets, disruptive even, which requires an answer or a reaction. You can probably think of companies that no longer exist because companies like Amazon and Walmart got into their markets and were taking action, and then those companies just aren't on the landscape anymore. One very important element is the who and the how of sales, and I refer to that as channels, and channels being direct or indirect, which does have an impact on sales incentive plan design. So some people think of that as selling to or selling through. So an indirect channel, for example, might be the companies that sell to Walmart, where Walmart is actually the channel that reaches the consumer for the final sale. Especially in larger companies, you'll see specialization in sales roles. And that leads to different plan designs and changes in plan designs as, for example, a product specialist might be added to a new year. Certainly, anytime new products or services are introduced, we need to re-examine our plans. For example, when Apple or Samsung launches the latest smartphone model, how many of us actually think, I think I'll rush out and buy the current version of the phone? Probably not. Probably most people, if they're not locked into a contract, are thinking about, how do I get that new model? And of course, the manufacturers and the resellers of that have to be ready with compensation plans for that as well. In most cases, and for most companies, there is some level of competitiveness. And this is especially so when it comes to selling something like a commodity. The commodity doesn't have a lot of differentiation. So sales incentive plans have to be modified to take advantages when they can get an additional percentage or two of market share of a large market. That can be rather significant. One company I know, for example, sells technology to make ink and dye dry faster. Now that sounds rather boring. I mean, the analogy of that is let's watch paint dry, right? But this technology is disruptive. It can replace, as an example, it can replace a label that's applied to a bottle with glue. Because with their technology, you can paint the label onto the bottle or the can and dry it instantaneously without worrying about it running and so forth. But that kind of disruption, that's a technology disruption, but that can save manufacturers thousands of dollars in time and manufacturing costs. But first, that requires capital investment. And convincing a company to not only buy your product, but to invest in new equipment in order to do it, that requires some convincing. Okay? That is a perfect example where sales is the tip of the spear. The company has a great idea, but how do you actually execute it? How do you turn that into revenue? And that's through the sales comp plan. And we're all probably familiar with compensation plans that may be so complex, they're simply ineffective because they're hard to manage, they're hard to administer, they're hard to communicate. One well-known consultant that I have taught with before and consider a friend refers to sales incentive plan complexity with what he calls the Roman numeral rule. And what that means is if the plan requires more than 3 Roman numerals to document, it's probably too complex. And that's the kind of guidance that you can give in a process of putting together a sales compensation plan design. It's short, it's meaningful enough that people can understand, but it also gets the point across in terms of a key design principle that a lot of companies adhere to, which is simplicity in their plans. Do you have enough time? The when question always has at least a little flexibility. So I'll give you some time frames here, just in terms of general guidelines, because the answer to do you have enough time or there isn't enough time is typically, well, find the time, right? And sometimes that means when it comes to designing a sales comp plan that some things get done by the deadline and some things come a little bit later. For example, many times companies aren't ready yet to set quotas for their salespeople on the first day of the year. Now, some companies can do that very easily. Many companies that I've worked with cannot. And so they might roll out the comp plan with, for example, quotas to follow within several weeks. So let's look at some reasonable estimates, though, for change planning. And I'm thinking change planning here when there are like a few more complicating factors, not something that's so simple as what we might think of as a tweak. So it actually starts probably when the old plan doesn't even really have its legs yet. You start looking at what you hear is working, what's not working, and in this process of rolling out a new plan, there will always be noise. We have to get used to the noise. We have to get used to, by the way, where the noise comes from, because many times noise comes from the same places. It might be the same country. It might be the same sales manager, but it typically comes from the same place. But you have to sort through that. You have to discover what's the real issue. What might we need to put on the table to adjust? I would start to think about your new ideas maybe about 5 months out. So thinking about what have we heard, let's start to assess that. Let's start looking at what the new ideas are. Now, by the way, this is well in advance of the business even knowing what it's going to do in the coming year, unless you have, for example, very long product roadmaps that have been set for some time and you know the new year will bring, for example, a new product, then you have a better sense of this. So you probe sales management for their thoughts, you ask about new roles, and you also start to line up sources of market data, especially if you've never done this before, because that can take some time. There are some good sales compensation surveys out there depending on your industry, and typically they tend to be better surveys the more specific they are to your specific industry. Next, I would start to think about who should be on the team, because this is not something that someone goes off into a closet to design the next year's plan, or it shouldn't be. It's a collaborative process. So where is the business headed? Are there new markets? Are there new products? Do we have revenue projections that, for example, might even change how quotas are allocated? Do we have new types of jobs that might change how quotas are allocated? And if you have much of this in hand already, make sure someone is starting to think about what that might mean for the how of people get paid. What sort of systems changes might be necessary? Where will that data come from? Once you get to the new year, you're communicating, and you're communicating, and you're communicating. So similar to any sort of a change and a change management process, and especially on compensation, you're using all available tools, verbal, in writing. With sales comp plans, you can provide models, whether that's some type of an online model or some sort of a calculator that a salesperson can go in and enter their assumptions about their performance and see how the plan pays them. And by the way, don't forget you're also wrapping up the last year. So many times when you're calculating, for example, the accelerator payout for people that have exceeded quota, you have to get the final numbers in, and that happens, you know, maybe the 13th or the 14th month, depending on your sales cycle. So don't forget that you're also trying to make sure people get paid under the old plan. So that's almost a full-time job, isn't it? It may sound like it. I may have, you know, sort of trumped it up a little bit, if you will, but it's not really a full-time job. And certainly the more time and the resources you have, the better able you'll be able to manage the process. Now, I don't want people to get the idea that, oh my gosh, you know, I only have 2 months now to go, there's no way I'm going to be able to do it. Well, if you only have a few changes, you know, you're already looking at the business, not a lot of change there, not that many new roles, you already have market data sources and so forth, you can certainly cut this timeline down. Another question that we asked up front is the who. So with the who can be complicated, or either too complicated or actually not complicated enough. In other words, you can't engage with the people that really need to be part of the process. But my experience tells me, if I use a RACI, okay, and that's just a way of clarifying who does what in advance, that helps to figure out how we're going to make important decisions and who gets involved in different processes along the way. So a RACI, R-A-C-I, stands for people who are responsible to perform the work, the person, and by the way, that's a person, who is accountable to make the decision. So if you're working with a committee, it's helpful to even have a tiebreaker at that level. Other people who may need to be consulted before decisions are made, and then people who need to be informed once decisions are made. So when it comes to sales compensation design process, here's a quick view of the roles that I typically see involved and why they're involved. And for the most part, sales management is the accountable one for decisions in most cases. These are sales compensation plans, after all. What we're trying to do here, though, is to make sure that the fox doesn't have complete access to the hen house, to use that analogy, that sales management doesn't simply have its own way to determine how they are paid. By the way, something like this is also good to have during a plan year. So once you have a plan in place, to have a RACI that helps to document who makes decisions on questions like exceptions to plans. And for example, what happens when a quota changes? Do we shut off the old quota and pay on that? Do we blend the old quota, the new quota? Those kinds of questions in advance to answer those, rather than struggling through those during the plan year when the exception comes up. We'll switch gears now and look more extensively at the how, because that's really what's behind most of the mystery of sales incentives. Remember earlier, I said sales compensation plan design is an outcome, okay? I can't stress that enough. So here's where I really enjoy this type of work. Me personally, because not only do I get to learn more about the business, but I can contribute to the success of the business. I can put incentives in place that connect the dots for the business to be successful in order to achieve its objectives. So let's start. I have a couple of examples here of how you get to know the business and sort of the types of questions you need to ask. Okay, so the first one is, we need to grow sales next year by 10%. And I don't know where that number comes from. It could be, you know, part of the long-term plan. It could be, you know, some random number the CFO came up with. In any event, something like this has more implications for a sales compensation plan design than just increasing everyone's quota by 10%. okay? Because you may get some increase. For example, one company I've recently worked with had an objective like this, but first we had to take into account that they were increasing prices by 5%. So there's an automatic 5% increase right there, assumed 5% increase, which then obviously had some effect on what we would need to do for the sales compensation plan. So here are some possible questions. Do we need to maintain current margins, or for example, would we be comfortable with margins decreasing if we're able to get revenues? What about new products? If we're introducing new products, what does that do to revenues of existing products? Are we expecting our new products to be sold to existing customers, or are we expecting sales to go out and get new customers? What if we did try to increase revenues, but we weren't increasing spending or changing the approach to marketing and advertising? Wouldn't that maybe put sales a little bit behind the 8 ball on being able to achieve this objective? Do salespeople set and negotiate price? You know, this is one area where if we don't ask this question in advance and make sure we have an answer to that, we could get a really negative result with salespeople cutting price in order to hit overall targets. So ultimately, asking all these types of questions helps us to understand, based on the current system, will our incentives need to change? Here's another set of questions. In this case, we want to grow revenue in key accounts by some percent. So the first question is, okay, let's make sure we all understand what a key account is. Chances are someone has thought through, you know, like for example, well, a key account is an account that in total represents X percent of our overall revenue, or, you know, we have some percentage of all the business at that account. There's some definition of a key account so that we can design a plan just for those accounts. Another question, which we could ask actually almost for any role, but is the opportunity in all this in this role equal? We might have one key account where the overall quota is only 1 million, another key account where it's 10 million. Does that deserve the same type of compensation plan, yes or no? Do all key accounts have the same kind of support resources? For example, we have field application engineers maybe supporting some of our key accounts, but one field application engineer is supporting the one $10 million account, while one has 10 $1 million accounts to support. That's going to result in different levels of support that are available. Do all key accounts have the same product mix? Again, my experience in this has been, if we don't ask these questions in advance, we discover things after the fact. You know, here I have a key account where they've just now started buying from us, and there's a greenfield opportunity to sell them more, versus another key account that's always bought the same products, you know, very reliably, but without increasing their purchases very much over the years. So the opportunities may be quite different. One of the things that you discover as you start asking these questions about getting to know your business is that you may have stakeholders in the business that are very interested in what goes into the sales compensation plan to make sure that their business has representation. And a lot of times this happens with companies with multiple divisions. So division GMs might say they want to see something specific about their business represented in a sales compensation plan, and suddenly you have, you know, 5 or 6 metrics that salesperson or account manager is responsible for, and you have to watch to make sure those types of things don't happen. So let's look at sales, okay? Let's answer some questions about sales. The sales cycle itself is very important. How long does it take to sell something? Because that's going to connect us to, well, how often should salespeople be paid? And typically it's around, we try and match the frequency of payment with how long it takes to sell something. What about decision makers? It's certainly going to be easier for a salesperson to go in and present and close a sale with one person as a decision maker rather than having to go to committees and be introduced to executives and so forth. And by the way, that will typically extend the sales cycle as well. So even though you have to get to know sales better at some point, yeah, and that may, quite honestly, to some people that seems a little bit unseemly, you know, where they don't have necessarily a high opinion of sales. But I can tell you, you know, I've met the most of the salespeople that I've met in this process over the years. They really want sales compensation plans that work, and they look forward to working with people to help them achieve that goal. So you don't have to be an expert in sales, but you need to know experts, and you need to know how to get questions answered on sales that will influence the design. A key one is, when do you want the salesperson to move on to the next customer? Is it after something is booked? Is it after the customer pays? Is it after it's installed? You know, all those things that dictate to the salesperson their behavior. How long should I stay engaged with this customer until I go out and start to try to get the next sale? And there are many other questions here. I won't talk through these all individually based on our time available, but other questions that should be answered or should at least be understood. Some of these have more effect on a compensation plan design than others. Within the design process, a lot of people will come to the table with different ideas, okay? And certainly that's true in many of the individual decisions that are made in the design of a sales compensation plan. Let's look at some of those specifically, okay? So when it comes to the design, we're trying to answer a number of questions after we're armed with knowledge of the business, how sales works. We start to dig in now to these questions. These are all elements of design that have to be answered, starting with how many roles, how many plans. We have to answer questions about channels. We have to answer questions about levels of work. For example, do we have entry-level salespeople and senior people and so forth? And the influencer role. Okay, so to what degree is the job influencing the customer to buy? And then you can come up with a seed list for really how many plans you're going to need. You'll need an understanding of where you want to pay. And for the most part, the majority of companies decide they want to pay total cash. So that's base plus target incentive. They typically want to pay that around the market, 50th percentile average, somewhere in there. But you also need to decide, where do you want to pay your best performers? And the way I typically advise my clients is, let's look at the 90th percentile for that of target cash. In other words, let's pay our top performing sales employees like the top paid employees in the market, because we want to keep those people. And we want to give them that kind of a pay opportunity if they get to that level of excellence. Now, target cash is not going to determine what part is base and what part is incentive. And actually, surveys aren't going to do that for you either. And some of this is just your experience working with surveys to understand the data a little bit better going in. But generally speaking, the pay mix, in other words, the ratio between base and incentive, should align to the role, to how much influence the role has. And we'll talk a little bit more about that later in some specific examples. You'll need to select metrics or measures, how they're set, and ensure an alignment and line of sight to the person in the plan. And once the measures are selected, weighting them, because you can't just have a bunch of measures, they have to be weighted as to what portion of target incentive they represent in calculations. So let's look at a few more of these in detail. On the philosophy side, an important part of being able to determine a design is to understand some of the foundational issues, starting with exactly what these plans are intended to do. And typically that's attract, retain, motivate, etc. It's really in the underlying details, though, So I call these the principles around the design that dictate what a final design will look like, because you can always evaluate all the proposals that you're dealing with on a design against your principles to see if it passes those tests. So here's a case with some specific examples, okay? Simplicity, almost always something that everyone agrees to, but it needs examples. It needs an example like no more pay elements than 3, okay? Because we want calculations to be easy to understand, we want to create a focus, and so forth. Another key principle, which I mentioned earlier, is how do your top performers get paid? And I see many plans that are unsuccessful because they simply are too peanut buttery. They spread the rewards out amongst too many people. Now, percentiles are available in market data, so we can create plans. I'll show you a little bit about this in a minute or two. We can create plans that align our top performers with the top pay in the market. Another example, final example here might be how thresholds are used. So before you get paid, something has to happen. Again, this is a performance issue, and wondering when we look at our plans, do underperformers still get the same measure of rewards as others? Because being paid 80% of your target is not necessarily a bad year, and you can live off of that, versus someone maybe who made over 100%. There should be some more significant differentiation there, in my opinion. Now, thresholds may be used in other cases and examples. There's other issues involved. We're not going to go into detail of that here, but just an example of would you even consider the use of a threshold. The pay mix usually varies by sales role. In this table on the right, you can see some of the reasons behind that. Looking at some characteristics of sales on the left side of the table, then the spectrum of where the answer might lean towards a low mix, okay? So that would be a higher base relative to the incentive target versus a high mix or more incentive relative to base. Now, there's almost never a perfect landing zone here, but usually you'll find the answers, because you tend to lean one way or another on most of these. The typical low or higher mixes are shown at the bottom. For example, if those characteristics in the low column were all aligned in terms of your answers to these characteristics, you'd probably go with a plan maybe around 80-20, as opposed to the high side if you were leaning more toward sales roles that are prospecting. They're more primary on selling and the influence of the customer at the short sales cycle, and that type of thing. Next, how do we determine earnings beyond target? Most would agree if a quota is achieved, then the target variable should be paid. But what then? So first of all, here's a chart that shows upside or over target earnings opportunity, which is really a function of the term skin in the game, excuse me, or how much the role had at risk in the first place. So here you see 3 example mixes, 80-20, 70-30, and 50-50. And you can see the blue bar plus the red-orange bar equals 100% of target pay. With a lower mix like 80-20, the upside might only be about 2x the variable, while with a higher mix like a 50-50, 3x might not be too uncommon. Then you've got to answer the question, what sort of performance earns that sort of an upside? Again, it's math, and this graphic shows an example of that where on the x-axis 140% of target is attained, and we'll call that our excellence level. That's where our top performers are. And at that level, the plan is paying out at 200%. Now, this graphic is going to be different for every company because of how much is sold, you know, how your quotas are set, and so forth. But generally speaking, this is going to create an equation of a line. So if you looked at the slope of the line between 100% of target and 100% of quota, and that 200 to 140, that line has a slope. And that can be calculated as a commission rate. And you can see that that commission rate in this example is going to be higher or ramped up from performance under target. So while I say it's just math, it does take a little bit of practice to connect the dots. Performance measures, such as growth, because growth is what many sales plans obviously need to include, come primarily in three types. There are volume-oriented measures, productivity-oriented measures, and design-oriented measures. And most of the time, sales incentive plans use volume-oriented measures. Okay, so the means of growth, which really is selling more. But there are other ways to get growth, like reducing expenses and finding new customers. Sometimes when it comes to these measures, they are more specific to sales management plans. For example, expenses typically are something in the control of sales management, or another performance measure, which we call price realization, is again typically something that is more in the control of sales management, as they're usually asked to approve if something is an exception to a price list. Here's a list of performance measures and how they're usually characterized. And volume is by far the #1 preferred and usually the easiest to use in creating a sales plan, and that rewards for true quantifiable performance. Other measures here may lead to results, but maybe by a less direct path. So they might be, as an example, modifiers. If we looked at, for example, at 2 contracts that were sold and they were equal value, they're not equal if one is for 1 year and the other is for 3 years. In other words, 3 times the value of the 1-year contract. And so with sales plans, we might put modifiers in, for example, to encourage the behavior of selling contracts for a longer term. Now, you may think after all said and done that we're done with the design, but no, there's more. And so here's a brief review of what else that needs to be considered. Specifically plan mechanics, I mean, things get complicated there, but obviously we want to make sure there's testing, there's costing. We're going to look at in a little bit more depth later at automation. Plan mechanics can be fun. I say they're fun, but they can also trip you up. It starts with how the incentive is calculated. Is it a commission? Is it a bonus, etc.? Okay, then you have to consider how much incentive is assigned to each measure, how the measure gets paid. Are there thresholds? Do we have linkages between measures? Are there maximums, etc.? An example of a plan then, when you have to take all these things into account, might be, here we have a 60-40 plan for an account manager. We're going to have just 2 measures. We're going to have revenue, paid as commission, and we're going to have gross margin, paid as a bonus. Okay, and both of these measures have specific quantifiable targets. Revenue will be 75% of the variable, and gross margin will be 25% of the variable. We're going to have a progressive ramp on revenue. In other words, the rate changes as the achievement is increased, and those change points will be 50%, 100%, and 110%. And we want to create a ramp between 110 and 150 to get to the 3x variable multiplier. For gross margins, we'll have bonuses, and we'll just scale that up to 150% of the variable. We will not have a threshold, so from $1, revenue will be paid, but gross margin will not. Gross margin will have a linkage, and we won't pay gross margin bonuses until the individual has achieved 80% of their revenue target for the period. Okay? So that's a way, obviously, of encouraging more of attention to be able to get gross margin while also providing at least some minimum level of revenue attainment. Let's look at just a couple of other things here, and I call these the things that go bump in the night. So sales crediting is always something that, or usually is something that can get ignored. How many people are actually being paid for a sale? It's usually more than just the salesperson. Always think about things that are seemingly outside of your control, but will influence the success of your plan, like the quota was not distributed in an equitable manner. We should think in advance about things like the unknowns, the bluebirds. That's something that, by the way, unexpectedly flies in the window. To know where the salesperson really didn't have anything to do with it, but it falls into their territory. In some companies, when something's sold like a subscription, we see revenue that goes beyond the initial sale. How do those people get paid? Sales likes to do contests, likes to do annual recognition programs, even being able to answer questions like, well, who gets to go on the trip? I mentioned earlier, understanding exceptions in advance, marketing and others, people who want to ride the bus. I mean, a lot of times when you're looking at an up year in sales, you'll see suddenly people will say, well, shouldn't I be on the plan too? And really the key test here is, did they really have anything to do with the customer making the decision to buy? And that, by the way, that doesn't include things like, well, I came up with the design for the brochure. That did not necessarily influence the customer to buy the product. Finally, how do you manage situations where one rep maybe has 5 times the quota of another, but maybe the territory is easier to cover? These are things that come up that will essentially cause you to tear your hair out. We have 2 more things to cover, and then we'll do questions. The first is being able to communicate the change. So compensation and communications are 2 words that probably can and does scare just about anybody that has to do it. But let me just give you an example of one way to communicate the change. So we start out with, we're a great company. We pay well, but we all know about changes we're experiencing. And you know, you gave some really good feedback, as did company leaders. So we've looked at the plan, and the plan is going to get better next year, but it's going to improve. Specifically, you're going to see X, Y, and Z, so we touch on what's going to change. This sets us on a great path and an arc for growth. And your pay will continue to reflect your contribution to that. So what you need to do now is meet with your manager, ask questions about the plan. By the way, it implies that managers are equipped to talk to their employees about the new plan, and get your quota. Okay, so communication doesn't have to be hard. It obviously can be more difficult when we have situations that might be considered takeaways. Now I can tell you, even with all the work you put into coming up with a great plan design, that without a solid plan to calculate, track, and communicate results, that's all for naught. Let me turn it over now to Gopi Mittal to describe more of what he's seen in his experience that makes automation a critical element of the process. Gopi? Gopi, I can't hear you. Gopi, go ahead. Well, let me go ahead while I'm waiting for that technical difficulty to resolve. Let me go ahead and talk about a few things on the automation side. And Gopi, as soon as you join, you let me know. So the first thing in terms of automation is giving your sales reps visibility of the calculation and enabling them to understand what it is they need to do, what behaviors they need to change in order to align to a payout for the plan and obviously influence their motivation to get up and make the next sale. You there, Gopi? Nope, okay. Sales compensation, this is just an element, this is a piece of research that I did prior to this webinar, and that's that sales compensation software.
Okay, I'm here.
Are you there? Oh, very good.
Okay, sorry, it was my cell number was used. Anyway, thanks, Jim. I appreciate it. You can go ahead and pop all those points up. For those of you who are listening, Jim has presented really excellent insights. I always learn a lot whenever I attend his presentations. I would say that Jim is presenting an architect's view. It's like he's presenting you the 3D model, the blueprints, etc., which really help you design the perfect home. And my job is more like the construction manager. I have to do the plumbing and electricity and things like that. So, what does it
deal with the change orders too, Gopi?
That too, yes. I cannot forget those. And I had to, do it on time. So, what is life like after the design is where I want to bring some thoughts in. What does it look like? You created the perfect plan. Everything makes sense. Jim's insights help you do the right thing. Now, what does it look like? You're in the year. Your year of commission calculations have to happen. So what ends up happening in most situations that we find is that you have to create lots and lots of spreadsheets and lots of formulas. You may have to literally create, if you're lucky, you have some kind of a custom system, but Access or something like that. But generally, it's Excel. You create one Excel worksheet per salesperson. And when you create more, you keep copy-pasting these reps formulas all over the place. Then once you have that, and hopefully without mistakes, then you have to get data from IT. They have to give you customer data, product data, rep data, the actual sales transactions, which can come from CRM, which can come from accounting systems. And you have to paste it into these Excels, make sure it's going to the right spreadsheets, run the calculations. And of course, this is the time when you're getting territory changes, you're getting rep changes, somebody calls in and says that transaction shouldn't be paid or the amount is wrong. You do all of those changes in the Excel spreadsheet. Then you calculate and get your results. This is taking you a few days. And then once you're done with that, and if you may be doing some kind of a validation, maybe a manager or management is approving it. After that, you have to actually break all this Excel into many different Excel spreadsheets so that you can email it to the reps individually. Lots of manual work, lots of error possibilities. You send one statement to the other person. Those kinds of things can happen. And then after that, you deal for a couple of weeks of complaints. The reps are complaining because they didn't get a credit. They got credit for the wrong deal. They go to their manager. The manager is angry. Sometimes they're salespeople. They go to the CEO. The CEO gets upset. So now you have to make past period adjustments in the system. And by the time you're finishing a past period, your next month is already on you. So this is what your life looks like once you have the commission plans designed correctly. Okay? So automation helps dramatically reduce these problems. What you're really looking for is a system that is integrated with your CRM system, Salesforce.com, Microsoft Dynamics, etc., for opportunities, and also for the accounting systems such as Microsoft Dynamics, Great Plains, and so on, for invoices. You want a system that understands plans and plan templates and formulas that are in libraries that can be shared across many people to reduce errors. You want the ability to be able to automatically and daily calculate commission so that you can find problems before the end of the month. You want a system that can immediately present those commission statements to salespeople over the web. And you want to validate the data. You want to be able to create adjustments. You want to export to payroll and accounts payable, and you want to close month. If you thought through those things, and there are a number of systems in the marketplace, ours among those, you get the kind of output that gives better visibility to the salespeople right away as soon as you calculate, and maybe even during the period. You reduce errors dramatically through this process. You can have validation reports that can find errors that you may not even be aware of, which we typically find. You stop salespeople from doing their own calculation. We call it shadow accounting, and they have more trust in the company and the systems. And then also you're not spending as much time. Everything gets calculated faster. Results are available quicker. You can now do much more analytical work. You can give more reports to management. And HR and finance especially get satisfied because you can make sure commission plans are approved by multiple people and you're compliant to financial requirements like Sarbanes-Oxley. So these are all the kind of results you can get by automation and eliminating spreadsheets. So that's really my piece of the thing. I just wanted to mention that this is more mechanical, and really the thought process is what Jim was telling you. But these are the things I would want you guys to keep in mind as you go forward. So thank you. That's my part, and we can do the questions now.
Before we do, let me just add one piece to this, Gopi, and that's that having the design partner or the automation partner while you're thinking about the design is pretty important. And this is, by the way, the background of how Gopi and I met was I had a design for a company I was working for, and I was looking for a partner on automation. And by the way, the answer that I was getting from many of those who I sought out was, well, if you just change your design to do this, then our system will work. And that was not an acceptable answer for me. We had a design. We knew what we needed there to make it work. So that's how Gopi and I ended up actually meeting many years ago.
Yes, it was definitely. I just have a quick question myself, Jim. Like people have many different business divisions, and there can be overlaps in commissions. There may also be outside channels also in the sales. Like, what is your advice in handling those kind of situations?
Well, especially dealing with channels and channel partners can be very difficult because you may have a best case, for example, of how do you sell to a channel that another company that represents your product and then sells your product maybe with a markup or with a consulting agreement or something like that. So the data should be well tested, and the sales force, and usually that's represented by sales management, has a high level of confidence in using data that comes from someone else. Because when you're dealing with channel partners, many times the data is sell-through. One company I worked for once, we sold printers, and the sales force would do what we called stuffing the channel. Because at the time we weren't using the sell-through data, we were using the data of how we sold to our partners. And so at the end of a period, like the end of a quarter, the sales force would sell a whole bunch of printers and get credit for it, and then the partner would return them the next month and get refunded. So salespeople were gaming the system in a situation like that.
Oh, thank you. Yeah, that is the big risk with especially when you have this sort of channel work, and gaming is a big problem as well. So yeah. Well, I think we are about out of time, and I think maybe Diane, you want to wrap up?
Yes, Gopi, thank you. And you're right, it looks like we are out of time. That's all the time we have for today. A big thanks to Jim and Gopi for the very insightful presentation, and a big thanks to everyone as well for attending our webinar. Just as a reminder, the slides and the recording of the webinar will be sent to you within 1 week from today. So thanks again, and have a great day, everyone.
Thank you all.